Amazon reported earnings last week and they crushed it. The stock was up 12 or 13% the next day. And although it gave back some of those gains, they just recently came out with a new partnership with, guess who? OpenAI, which sent the stock soaring again. So you might be wondering, is Amazon still a good investment at these levels, at these evaluations? What can we expect for the future of Amazon, right? And AWS, of course. Well, that's what we're going to cover in this video. So we're going to touch on some of the key highlights from their most recent earnings report. And then, of course, we'll jump into the fundamentals to take a look at the bigger picture of Amazon, to see what's been going on, which segments of their business has been growing, which have been maybe not performing as well. And then towards the end of the video, as I usually do, we'll jump into the technicals, take a look at the charts, and overall just try to determine whether or not Amazon is still a good investment and or maybe some good levels to keep our eyes on if you're looking to possibly buy Amazon on the next dip. With that being said, all I ask is for one thing and one thing only, and that's to please like this video and of course consider subscribing to the channel if you enjoy content like this. With that being said, let's get started. Okay, so first let's start with their Q3 2025 results compared to what analysts were expecting, right? So we had their EPS coming in at $1.95 compared to the analyst estimates of $1.57 to $1.58, that beat by 24%. Total revenues beat by 1.3%, so not a big beat there, but nonetheless, it was a beat. And then you had their AWS revenue and their advertising revenue also beating by a few million. So what are some of the key takeaways from here? Well, the AWS revenue growth accelerated to 20% year over year, which you can read here. The CEO, Andy, noted that this was the fastest pace since 2022. Advertising services also performed strongly with a 24% year over year increase in revenue. You got to think, for a company like Amazon to grow at 20 or 24% a year, that's pretty intense, right? I mean, they're a couple $1 trillion company. They're making billions of dollars, right? That's impressive. And of course, we'll get into some of the things that are really getting investors excited, right? Because investors like growth, and there's an argument to be made that Amazon has seen much of their, fast-paced growth, or have they? That's the question. All right, so moving on though, we have increased spending forecast. So Amazon raised its CapEx forecast in 2025 to $125 billion. It's pretty, man, that's crazy. And so just so you guys know, not only Amazon is doing this, right? Like all the big tech companies, your Googles, your Meta, that's one of the main reasons why Meta's down right now, because they're raising their CapEx expenditures, right? And it's got investors a little bit worried because they're like, holy smokes, like, are we going to see this pay off? Because these are huge investments. And when we get into the charts and we check out like their free cash flow, it doesn't look pretty, but that's one of the reasons why, right? Like they still have a lot of cash. They're spending it all, right? Which you typically do. I mean, you either invest it or you do share buybacks or you do something to help the company grow and help increase shareholder equity, right? That's the idea, at least. That's what keeps shareholders around. And then so you can see here why the stock was sent soaring, pretty much because of the strong earnings report and robust cloud growth. All right, so it's the cloud growth. It's the AWS business that is really exciting investors because if I'm not mistaken, and we'll look at it, but their retail sales or just the company in general, right, is growing around like 10 or 11%, which is very normal for a mature company like Amazon, right? Again, when you're making billions of dollars and you're still growing at 10 or 11%, that's pretty impressive. However, you have, segments like AWS that's actually fairly new, that is really starting to gain some tractions and seeing some pretty serious growth. And that's what could still be very exciting for Amazon. All right, so let's jump into some of the slides that they presented during the earnings call. All right, so we have their net sales, right? Up 13% year over year. That looks good. And they're breaking it down from their different segments, right? And you can see that North America is where they make most of their money. And the international segment is growing as well. Then you have AWS, which you can see is only 18% of the net sales at this time. But that's the segment that has a lot of potential for growth. Moving on though, we have the net sales TTM. So this is just like your trailing 12 months of sales. So in other words, just pretty much what they made for the past 12 months that they've reported earnings. You can see here they're up 11% year over year. I think I mentioned that, right? That the entire business in a whole is growing at 11% year over year, which that alone wouldn't really excite investors too much because that's what Amazon's been doing for a while. We'll see later when I go into some other charts, but nonetheless, not bad, right? Not bad. And then the AWS obviously is growing at a faster clip. Moving forward, operating income. Okay, remember how I said that not everything was pretty about the earnings call, and so we're kind of looking behind the curtains right now. And you can see here that the operating income was actually down or flat, right? Whatever you want to call it. Not really what you want to see. And then the 12-month, trailing operating income. Now that's up 26% year over year. A lot of that has to probably do with the AWS growth. It seems like the retail sector has not been performing as well, which is understandable though, right? We're going through a lot of uncertain times. We have the tariffs. We have all the fears of a recession. Obviously, if there's a recession, everyone stops spending as much money, right? And that's going to hurt Amazon first and foremost. Nonetheless, when we look at the operating income, on a trailing 12 month, we look good right there. But it's still something to consider that quarter over quarter, it's declining. But that's why I like to take a look at the bigger picture. I always mention it's never a straight line up, right? All right, so moving forward, net income year over year up 38%. That's awesome. I mean, for a company like Amazon and how big they are, for their net income to be up that much, that's great. Look at the trailing. You have up 53%. Crazy. Growing revenues a lot. And again, AWS is a big reason for that. And that's their cloud computing. Real quick, I wanted to throw this in here in case some of you are wondering, like, what's AWS? Like, well, what part of the business is that? I thought Amazon was just a big retailer, right? Amazon.com. I buy a bunch of stuff out there all the time. Well, check this out. So AWS is a comprehensive cloud computing platform that provides on-demand IT resources like computing power, storage, and databases over the internet with a pay-as-you-go pricing model, right? So it allows businesses and individuals to run applications and services without having to invest and manage their own physical data center and hardware. So we just mentioned how capital extensive this was, right? So this gives companies an ability to use what AWS has, right? And to just pay them on a per month basis, right? And when you're done with it, you can stop and cancel at any time pretty much, which is pretty brilliant because a lot of companies, unless you're just a big juggernaut like the Mag 7, right? Like your Metas and your Amazon, like companies that just generate so much cash, they almost don't know what to do with it. Well, unless you're one of those companies, you probably can't afford it anyway, right? So this is just, I feel like, again, this could be very, very bullish. I mean, I understand why a lot of people are excited about this segment. And then so it goes on here to say, AWS manages the infrastructure, enabling users to scale and innovate faster by increasing services on demand. All right, so pretty cool stuff. And then so here they're just breaking it down in different segments based off of where they're selling, right? So like North America being one of their biggest segments. You can see that the net sales are up. Again, operating income in this specific segment is down 15% year over year. Again, not pretty, right? I mean, operating income, that's like their core business operations, right? Like that's like your guaranteed money, your subscriptions, all that good stuff. You don't want to see that down, obviously, but you can see in the past it's kind of been up and down. So yeah, something to keep your eyes on for sure. Like a lot of other businesses, like AMD, for example, right? I know it seems a little off topic, but their gaming segment is shit. Like it's just crap. But their data center revenue is just trumping it and making investors completely forget about it, right? Even though at one point that was a very big part of their business. Kind of the same thing here, like the negativity around their operating income declining and possibly seeing a slowdown in the retail side of things is being trumped by the AWS or cloud service business, right? So moving on, we have the next segment, which is just the international sales, right? We can see that's up. Again, net sales is up 14% year over year, but the operating income is actually down 8% and then down 31% on an FX adjusted basis. Like that's pretty substantial too. But nonetheless, again, it's never a straight line up, and we are again in a bunch of uncertain times, even though other countries maybe not so, right? But then we have all the trade tariffs and trade wars and this and that. None of that's helping, right? It's not helping. Government shutdowns, all that. None of that's helping. And then look at this, the segment results for AWS. So up 20% year over year. That's what's exciting investors. Again, the company's growing at about 11%, 20% though, when it's just this segment alone. And then the operating income with the AWS segment is up, right? 9% year over year. So again, this is what investors were excited about. Yes, there was a beat. Of course, that helps, but that's not necessarily what sends the stock up, right? I mean, I've seen double beats all the time and the stock crashes because investors dig deeper into the results and they'll find something to nitpick, right? Anyway, moving on, free cash flow. This is one I mentioned, right? Look at this, down 69% year over year. I mean, you would look at this and you'd be like, wow, Jack, is this company like, are they running out of money? Like, what's going on, right? There's really nothing to be alarmed here. If you read down below, it actually says, right, so free cash flow is including purchases of property and equipment, right? So, I mean, CapEx, we just said they raised that up to $125 billion for 2025, right? They've been spending a ton of money to build out their AWS business and to build out their data centers and this and that. It's a very, very expensive and capital extensive, investment. I mean, it's not cheap to do these, right? But obviously the idea is that there is a ton of growth in this. Still yet to be seen. That's the goal though, right? Or else they wouldn't be making these huge investments. Nonetheless, still have a lot of cash on hand, just, nowhere near where they were this time last year. I mean, look at that. Again, down 69%. I mentioned this earlier though, they have to do something with the cash, right? Like, of course you want a company to have a bunch of cash on hand because it just shows that they're financially healthy. But you also don't want to see a company just have a bunch of cash on hand that's always increasing, but they're not doing anything with it, right? Like they're never making investments. They're not trying to grow the company, right? Or like a lot of companies will do share buybacks when they have a lot of free cash flow, right? Like so they always do something with that money. They pay a dividend, right? That's another thing they could do with a lot of free cash. So there's a lot of different options here. The main reason though why we're seeing this down for Amazon is because of all their investments, right? And I could probably argue that it's all pretty much the CapEx and the data centers and the cloud and AWS, right? And which you can see, I mean, it is growing, so I can see why they're bullish on that. This is interesting too, right? I pull this up myself sometimes, but it just shows that over the last year, they haven't really sold any shares or put any more shares onto the market, right? So they're not diluting the shareholders' equity, which is important. We don't want that. We don't never want a company just to keep diluting shares, right? And it's obviously a way for them to raise money. Doesn't look like Amazon really needs any money. They generate a lot of cash, even though they're spending a lot of it as well. But again, we like to see that. Okay, so now let's take a look at the bigger picture, right? So I'm going to take a look at some charts that I personally put together. I'm going to try to go through these a little bit quicker since we did just spend so much time on, the other charts and, a lot of it's the same information. But again, I just want to take a look at the bigger picture, right? Like this is Amazon since December 05, right? Look at this. I mean, insane growth. But the cool part I like about this program that I'm using is that we can see the estimates of what analysts feel, right, Amazon's going to grow in the coming years, right? So out to the end of 2027, 2 years from now. Look at this. I mean, they're expecting substantial growth, and this is the interesting part. You can see here, I mean, not a lot of growth expected for this last quarter, but then it looks like next year, we're going to really take a jump, right? At least that's what it looks like. And then another big jump as well. And it's probably a lot of the bullishness of the data centers. And then, of course, I have the total revenues as a percent change, right? So what we're growing year over year. And you can see here, 10 to 11% is seems to be their average. And again, I mean, it's pretty solid. It looks like analysts are expecting it to kind of continue declining a little bit, which is not abnormal for, again, a company the size of Amazon, right? You can't just keep growing at these crazy rates. It's easy when you're just, when you're comping numbers that are so low, right? I made this analogy before, but, it's like, if I'm like, I want to make $100, right? Like, to make $100 and then turn that $100 into $200 and then into $400, I'm growing it at 100% per year. I could probably do that, right? Pretty easily. But let's say I want to turn my million into 2 million, that might be a little bit harder, right? Or like your 2 million into 4 and 4 into 8 into 16, right? It gets to a point where it's hard to keep growing at 100% all the time, or just in this scenario 40% all the time, right? Once again, though, we'll see kind of what this AWS revenue starts to bring in, though. I could see this actually ticking up a little bit, in my opinion. Even if it doesn't, though, it still seems like a pretty safe bet. Moving on, we have the operating profits. Okay, look at the margins. They're increasing pretty good right here, up to 10-11%. This is good though, right? Like, this is a really good sign that the business is doing really well, and in the operation things like this, it looks like they're the cost of sales, right? The cost to run the business seems like it's going down, and that's taking the operating margins up. This is nothing to consider too. And I know this sucks for anyone that was laid off during this government shutdown or an Amazon layoff, right? My prayers go out to you. But nonetheless, when it comes to a business, Amazon making that layoff, like, think about how much money they don't have to pay employees now. And my belief is that they're doing it because AI is really starting to run things, and not because they're struggling. That's two completely different scenarios, right? One is terrible. Like Amazon showing signs of struggling, doing a layoff, that's like recession written all over it, right? On the other hand, Amazon really getting their shit together when it comes to the AI, and they're like, wow, we really don't need you guys anymore. Like, we have just robots and machines doing this for us, right? AI is doing it all. That's a completely different story, right? And essentially, that's what you want when you're making these big, heavy investments. You need them to pay off, right? And that's the whole purpose of them. I mean, the idea is that a lot of this is going to be automated. Again, good for some corporate businesses, bad for other businesses and the lower class people, unfortunately. All right, moving on. Free cash flow. We were looking at this one before, right? This is just a bigger picture, right? And so we can see that they are expected to continue growing free cash flow. And if we look into 27, holy shit, dude. Like, you know what I mean? We looked at that one chart a year ago. They were at 47 billion, right? I think is what that is. And so they're expecting this to go up. I mean, from where we're at now, that is huge. That's like a 10x almost, an 8x. They're expecting cash flow to increase by 27. I mean, that is pretty bullish. Nonetheless, though, again, I like to look at this one because it shows us the bigger picture. And although these are obviously just projections, Amazon gives us guidance into their company and what they feel, and that's kind of what these are based off of, right? Not to a T, but nonetheless, I mean, they're expecting Amazon to grow free cash flow a ton. So again, looking back at that other slide, we kind of see like this steady decline, at least for this year. Looking at this, though, doesn't seem like it's an issue at all. All right, so moving on, we have cash from operating activities. This one's broke down to a semi-annual, so every 6 months. Nonetheless, though, this looks good, right? I mean, we mentioned that operating income was down. We can see where it was up. And we also can kind of see a pattern here, right? Like, look, dips, up, dip, up, dip, up, dip, up. I mean, almost like every other 6 months, it's going back up and then coming down, going back up and going back down. Maybe this is something that's very cyclical with the company. But again, if we're looking at this chart from afar, it looks like we are on a steady incline up, and that's what I'm looking at, right? The bigger picture. All right, CapEx spending, we did see this as well. This just shows, though, paints a little bit of a better picture, just showing how much they've been investing, like how capital extensive, just the AWS business mainly, I'm assuming, has really been on the company. And, again, we want to see this to start to go the other way eventually. But I forgot who it was. Someone came out, though, pretty much saying during an earnings call, I forgot which company it was, but they pretty much said, like, it's going to be like a black hole investing in like the cloud computing and the data centers and, chasing this AI race pretty much. Like, it's just going to be never ending. Like, you're always going to need more and more and more computing power. So that's obviously super bullish for companies like NVIDIA and AMD and all your semiconductors. But it really starts to make you worry a little bit about other companies, right? Because again, if they're growing revenues at 50%, let's just take it back, right? They're growing revenues at, let's say, 20%, and they're also growing, their cost of sales, like the cost to grow that revenue has gone up by 10%, right? Okay, well, you're making your 10%, right? You're really not making that much of, but then vice versa. Let's say you're spending, or let's say your cost of sales, like the cost to make that extra money is growing at 20% and your sales are growing at 20%, like you're kind of really not growing then, right? And the idea is that eventually these investments pay off and you don't have to keep investing, right? That's the idea. Like in a perfect world, you make your big investments and they pay tenfold later down. The way this looks right now, though, is that it might pay off, but I mean, this time next year, are we going to be at 100 billion, 200 billion? Like, how much are we going to keep spending? Companies only have so much money, right? And if at the end of the day, it's really going to start shrinking their balance sheet, and it's going to start straining companies, assuming hard times, right? Anyway, something to keep your eyes on. This is a big topic of discussion, though, honestly, with a lot of these companies right now. All right, so taking a look at the next chart, we have the EPS on an annual basis, and obviously just where it's projected to go. Okay, and you can see it's projected to continue to grow, pretty rapidly for a company like Amazon. Again, I mean, a company like Amazon's not seeing growth rates like Nvidia or some of these other companies. It's just not going to. Okay, we were just mentioning this, right? The cost of sales, right? So you can see the cost of sales, and again, this is on a semi-annual basis, but the cost of sales keeps increasing, right? You can also see their profit margin, though, right, keeps increasing. So the way I look at it, right, is that, hey, we're making investments in AI. It is costing us more money every quarter, right, as you can see by the chart, but in return, we can see our profit margins also growing, okay? Again, ideally, and in a perfect world, this chart actually starts to go back down while profit margins stay the same or even start or continue to increase, right? That would be in a perfect world. But hey, I guess the thing to take away from this chart is just the fact that, yes, the cost of sales are growing, but profit margins are also growing pretty nicely. All right, now the next we have the consolidated net income. We saw that their net income was growing. I mean, yes, granted, it looks like we're kind of flat here, though, right? And I think a big part of this is that the retail side of things, as we mentioned, is down, right? But the AWS side of the business is up, which is making it flat, right? If it wasn't for that, that may not be the case. Clearly, investors are super bullish on the AWS and the market cap that, and the market potential, and the potential that has to grow, right? Then real quick, we have the balance sheet. Looks good, right? Looks good right here in the, gold. We have the total assets and then total liabilities. This looks really good. And it's always looked really good. And then here we have all the different segments and how the revenue's growing, right? So here we have the retail sector, right? The store online sales. They have brick and mortar too, I believe. I didn't pull that one up though. It was so small. These are the main ones. But this is a nice increase, right? Nice increase. We like to see that. We have subscription-based revenue. Everyone loves that, right? That's just consistent revenue. That's your Amazon Prime memberships. I got one myself, and yeah, they're pretty pretty good at selling their services, honestly. But anyway, we have, look, that's growing. That's in the blue, right? Growing consistently. That's what we want to see, right? We want to see that they're converting people and getting them to subscribe to their services. And then we have their AWS revenue that's here in the orange. Now, I mean, check this out. Like, it was nothing that long ago, right? And then now look, I mean, it's one of their most profitable segments besides the third-party seller services, right? Which is also growing nicely. So, I mean, when we look at this at a bigger picture, this looks great, right? I mean, every source of revenue that they're making is increasing year over year, is how I see that. So, yeah, it looks good. It looks good. And again, I mean, what we're really starting to see take over, and you can see it from this chart, is that AWS business, right? I would not be surprised. AWS is going to be right up here with their online sales in no time. Would not be surprised. That's just my opinion, but I think that's what investors are feeling as well. All right, so next, and I'm making this video way longer than I wanted to, I typically do, but I wanted to check this out. I forgot to add this into another video I had, but I want to look at the PE ratios of some of our big Mag 7, right? And we're comparing it against Amazon to see if we're overvalued based off of forward price to earnings. All right. So Amazon is in the blue. We have Microsoft in the orange, Apple in the purple, and Google in the green. You can see even after Google's big run up, it still looks like the most undervalued big tech stock that there is. Pretty crazy because Google, as I'm sure you know, has been on a tear. That's why I like to look at these projections, because this really gives you a better picture. And you can see based off of, where it typically trades, around a 22 or whatnot. So yeah, I mean, we're getting a little bit higher. Nonetheless, moving on to, let's see, Apple, right? Apple is trading at a 32 forward price to earnings. You have Amazon at a 33 forward price to earnings. And then right here below it, Microsoft at a 30 price to earnings. So based off of this, Amazon is the most expensive Mag 7 stock based off of a forward PE ratio, right? So that is one thing to consider. And you also can argue that Amazon tends to trade at a higher PE ratio compared to these other companies. As you can tell in the blue, right? It's almost always trading at a higher valuation than all the other Mag 7 stocks. So I thought this was pretty interesting, and I wanted to include this. All right, so that's all I have when it comes to the fundamental. I did mention as well that they signed that deal with OpenAI. I think it was like a $38 billion deal. Compared to some of the other deals that OpenAI signed, though, you just keep in mind, keep things in perspective, it actually was a pretty small deal. Like compared to the Oracle deal, the deal that OpenAI had with Amazon was a lot smaller. Nonetheless, though, it's still bullish news. It's good for the company, and it's going to generate more revenue. But with that being said, let's go ahead and take a look at the charts, do a little bit of technical analysis on Amazon, and look at some key levels that I would be keeping my eyes on if I was considering on getting in to Amazon and starting a position. So I have Amazon pulled up, and we are currently taking a look at the weekly time frame. And I just like to do this just to get a big picture of Amazon. And of course, yes, if you invested in this company, you are doing very, very well. You can see we've had some good buy the dip opportunities, but this happens with any company, good or bad, in any market downturn. And this is when we had a pretty big market downturn, and then obviously once we went bullish again, it was just a straight line up. You really don't get too many opportunities, and I mention this a lot, right? You never get too many opportunities to buy the dip at some of these key levels, right, on companies like Amazon or Meta or Google, right? You don't get the opportunity often, and in my opinion, when they come around, you need to take them. With that being said, this is obviously not a buy the dip opportunity with Amazon, and that's one of the reasons why I'm making this video. Now, with that being said, let's zoom in a little bit. Actually, before we zoom in, I mean, this is one level that I can put up right now, okay? And I like to do this because it really depends on your trading style, right? I'm doing this as if you're looking to buy Amazon for the long term. I'm going to give you some levels that I would start dollar cost averaging on, right? If you want to swing trade Amazon, you can do that as well. You want to day trade it, you can do that as well. It's not a really volatile stock. Obviously, during earnings, it's been kind of volatile, so maybe you could trade it for the next couple of days. But, it's just the levels I'm going to look at are more key big levels for a longer term outlook, right? All right, so and then obviously right around here, right? So I'm just going to put these lines here before we zoom in a little bit more, right? And then I'm going to put another one right here. I'm just kind of curious to see where these line up on a shorter time frame. But just so you get an idea of what I'm thinking, right? I mean, look, this was a very hard resistance. We could not break this level. We broke above a little bit here and there, and then we crashed down, right? And then we got back up to that level. It chopped up around it, right? We did finally break back above it, came back down. You can argue that we're testing that level, even though this was a pretty big wick. The market's been pretty volatile this year. And anyway, and then we rip back up to this level, right? We come back down. We rip right past this. I mean, this almost acted as no support, right back down to this level, right? I mean, you can call it what you want. It's close to this level, though, right? And then back up. So nonetheless, these are just big levels to look at. Like on a bigger time frame, this is, if the stock were to get down here, I guarantee it's bouncing. I mean, I don't see it coming back down here, to be completely honest with you, though. Obviously, in a market downturn, yes. In that scenario, possibly. The more likely scenario, again, just looking at the bigger time frame, this would be the first buy box, right? And we're going to zoom in a little bit back down to this 239 level, kind of giving back what they just broke out of, right? Coming back down to retest the level that they just broke out of. This would be even a little bit juicier if we could get down closer to 200, right? That would be a really good opportunity. Anyway, zooming in, all right? We're going to take it to the daily now. You see these levels look a little more clearer now, right? These levels that I drew, again, now you can really see what was happening on the daily. Like, we had a lot of consolidation around this level, right? We did come down. Yes, this was a wick, but that's all it was. We actually closed above this, though, right? Right above that line. Come back down, test it again, right? And then we had this gap. We gapped down, filled the gap, came right back up this level again, right? Before we finally broke out of it, okay? Sold off. Where do we go? Right back to this level again. So this is obviously just, if Amazon stock makes it back down here, which again, I personally don't think it will, you buy. You just do it. You don't ask any questions. You take all the money you have and you buy it. The next level, again, I'm looking at, you could argue that maybe we fill this gap right around here, right? We could fill this gap, which is pretty much the gap that we made after earnings. This would be your first buying opportunity, right? And Amazon, in my opinion, I don't think there's any issue just going ahead and dollar cost averaging. Could you buy it up here? Yes. Long story short, I think you could buy it right here. Why not, right? If you're a long-term investor, I personally like to look for, bigger opportunities, right? Maybe this thing keeps going up, and then we have a little market downturn, and before you know it, we're back down here. Yeah, maybe we go up another 10 or 15% before we actually come back down here, and you can say, I missed all those gains. From my experience, though, if you're patient, a lot of times these will eventually play out. Just depends on, how you like to trade, how active you are on this. Nonetheless, this is the first level, though, right? I mean, if you're looking to get in Amazon, you don't want to, wait and see if it touches these levels. This is where I see it coming down next. But here, let me put this up here. This would be more like a buy box, right? Because it doesn't have to fill the whole gap. But, ideally, if you get in around this area, it's just your common, I guess, law of support and resistance, right? This was resistance. You could see we couldn't break above it, couldn't break above it, couldn't break above it. We tried multiple times. I think it was 1, 2, 3, 4. The 5th time we broke out, right? Very confident when we come back down, if we come back down in this level, at minimum, unless there's some big news event, Amazon will bounce here at minimum, right? If you're looking for like a quick swing trade or something, or to dollar cost average, you can start here. And then I like to look at levels when you're dollar cost averaging. But, this would be my next level, right? So you have right here, 233. My next level would be, that 200 area right around here. You can see that was also resistance. Now that comes support, right? That's just how it works. And then in a very, very bad bear case, Amazon gets back down to here. That is a no-brainer. Buy the dip and keep on buying if it keeps going down. And, I want to mention this, right? Obviously, when we're looking at this, like, Amazon's been on a nice little run. We are up, or at one point, we were up close to 22%, right? In, like, 2 weeks. For Amazon, that's a pretty big move, all right? We're getting overbought on the RSI, right? We have the MACD kind of getting up there as well. And this is on the daily. Let's see, on the weekly, or even getting overbought on the weekly. Again, you can see here that there's been many times, though, that we go higher, right? And that's one thing I want you to keep in mind, is look at this RSI. Like, yes, it looks like we're oversold in the weekly, but there's been plenty of times where it just keeps going up, right? And we're kind of in that market environment. So that would be one thing to consider. And then we go into the 4 hour. I mean, we're overbought on most of the time frames. And again, now we're zoomed in a little bit on the 4 hour. This just gives us a little clearer picture of these levels, right? It kind of lines up with some of these moving averages here, right? So again, that's my first buy box, right? And then arguably, this would probably be my next one. Between the 211 and the 200, that would be like my next buy box. And then, again, I don't see a world where we get back down to this level. I mean, think about it. When we got down here, I think that was like liberation and all that. But nonetheless, like, I don't see that happening unless there's a market downturn. And of course, that's always a possibility. Maybe, sometime in the future. I don't know. Could be, you know, a year from now, 2 years from now, 3 years from now. It's always a possibility. But right here, you know, so and real quick, just before we end this video, look at some of the analyst price targets. We have the low on the street 240, mid 290, and the high 251, and we're currently trading at 250. So just based off of what analysts feel like this stock should be trading at, you know, within the next year, you know, there's still about 30, 40 bucks of upside if you look at it that way. Again, me personally, I always like to wait for a dip buy. All right, so to answer the big question, right? I kind of already did it if you've been watching the video, but is Amazon a good buying opportunity at these current levels? If you're going to dollar cost average and you have a long-term outlook, I'm talking the next 3 to 5 years, 100% start accumulating some shares now. It can't hurt, right? Amazon will keep growing, and there is an argument to make that it could grow faster than a lot of people are expecting. Now, with that being said, what I personally would want to wait for is a pullback to some of those levels that I mentioned, right? Which the first one's not that far away at 239. You don't need that much of a pullback to get there, honestly. Will it make it there? It might not. And if you're afraid that that might happen and you know you need to get into Amazon because you feel like the train's going to leave without you, then again, my recommendation is a dollar cost average into it and just keep buying some shares, let's say every week, every day, every other day. You decide that, right? My goal, though, is to kind of tell you what I'm thinking, right? I personally always like for a pullback to happen, right? Amazon has seen a bunch of upward momentum. Let some of that cool off. Let's pull back to some support levels and start accumulating shares there. I mean, you know, I don't see a world where Amazon just takes off like 50, 60% because it's such a big company. And to do that, you know, the market cap would be insane. But hey, anything's possible in the stock market. Either way, guys, I hope you found this video helpful. If there's anything else that you would like to see or want me to add or this or that, let me know down in the comments. I'm always trying to make my videos better for my viewers. And I'm almost at 500 subscribers now. So thank you. Thank you for anyone that's still here. And if you are still here, please consider subscribing and liking this video if you haven't done so already. And I'll see you guys in the next one.